All right. Good morning, good morning, good morning. Live streaming day 4. And let's day you understood we set a trade. We analyzed the trade, and you can see the two trades, both of them actually hit TP. Even though it took a while, there was some corrective motion, but at least both of them hit this particular target first before the last target was met, right? So it was very beautiful day yesterday. So let's see what we can do today as well. So um, the very first thing, as you know, we need to do, market has already moved on the Zukwanike if you were able to capture it, right? But let's take a look at what we have following our style of trading. So for today, on the 4-hour time frame, let's do our markouts. We mark out here and of course here. All right. So because the shadow and the body almost have the same length, so I'll mark it up at the top. So having done that, we come to the 30 minutes and you can see this is a perfect play for us, perfect play. This is why you always have to be on your screen. You always have to be on your screen by 7 a.m. And I'm going to teach you guys one thing today. I'm going to let you know about a certain structure that plays over and over and over again, all right? And that is this structure you are seeing right here. Usually, whenever the market moves in such a way that if it's trending up and then at some point it begins to give a curve, a smooth out curve, that shows a weakness in maintaining the uptrend. I have seen this over and over again, and it's playing out right now as well. So for instance, from here, you see a kind of curve here. You see a depletion in the volume of the candle. You see how the candles for the buys are very small, very, very small candles compared to when the market was trending up strongly. You can see the size of the candles here. The candles, like I will always say, tell the story. All right. So one thing you will understand here is that whenever you see this, in fact, we're going to go back in time to see if we can find a similar pattern for you to understand. So whenever you start seeing more like a ranging market on the upside in this manner, right, you know that market is really about to come down, especially when it aligns with our strategy. So it's been a beautiful morning today for those of you who were able to capture this trade. This trade right here is our Zukwanike. You can see it. You have a downtrend, a red candle, a green candle that has a tiny body compared to the shadow, and a break of that low of the green candle. And voila, so we expect the market to actually push all the way down, possibly to the pivot. However, a good place to take profit will be around here. That is to take your partials. This base right here, let me mark it out. So which if you mark it out is here. So you can take out 70%, 70 to 80% of your trade and then allow the remaining 20% run. I believe you guys know how to take partials. So now the reason why you have to learn the art of taking partials and letting the remaining run to full TP is to gain that needed confidence, is to gain the confidence required. All right, is for you to gain the confidence required to always allow your trades to run. Because many a time when market pulls down in your direction, what happens afterwards? It pulls back up, and then you will be scared shit. You will be scared. Oh my God, it's going against me. No, 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 no. So if you have done your analysis marked out, for instance, if we were to refer to the trade of yesterday, right? If we were to refer to the trade of yesterday, after taking our partials, you realize over here, watch it. After taking our very first partials here, right? You see that market didn't go easy, right? Market didn't go easy. This was the candle, this candle that ended as an inverted hammer. Market didn't go easy to hit the final TP, which is arrow trade. And not everyone will have the stomach to see this downtrend and still stay on the trade, right? But as you can see, despite all these downtrends that was experienced here, none of them hit our stop losses. This is the stop loss of the second trade we took, and this was the stop loss of the first trade we took, right? So if you had, let's say, if you had taken partials and let your trade run, possibly just leave the chart and start attending to other activities of your day, you just come back to see that you have hit TP without being taken out. So look at the trade, is moving massively. Let me remove this particular line here. It's not part of the trade for today, right? So let me take this out. Good. So you can see that here. So believe you me, and one thing you have noticed, this is the reason why you always have to show up, like I keep saying. One thing you have noticed is that every morning by 7 a.m., market flows. So it is an opportunity that you need to capture. So if you are someone that sleeps, someone that don't manage your time well, you are going to be missing out on these big opportunities. And just look at what the market has already done this morning. We're already at, let's see, this is a, let's see how many risks to reward that it has. This is a 1.3 risks to reward now, right? So if you are risking 2% now, you should be about 2.6% up on your account, right? So this is how beautiful what we have here is and shouldn't be taken for granted. Market is moving. You can look on the left, free traffic. So I was only being modest that is going to get to P. We can see this thing move all the way down, further down. But we are being modest, setting our TP at the pivot here. So this is how you have to learn how to trade. So while this is moving, what we have to do now is to look for a similar curvature. And if you guys remember our MACD that checks for divergence, believe you me, I believe that if we put up our MACD now, we are going to see possible drop in volume. Markets made a high here and made a higher high here. So what I'm going to do now, I'm going to put up the MACD and check, and I'm going to guess that in the MACD, we are going to see, instead of an uptrend like we have here, we are going to see a downtrend on the MACD. Instead of a higher high, we are going to see a lower high. So let's check that out. So I'm going to go to indicators. I'm going to search for MACD for C. This is it right here. It's one of the favorites. So I click up MACD for C, and there I have it. Okay. So let's see if we have that in this case. Oh, okay. Now in this situation, look at this. Just look at this. It is only an inch. In fact, let's mark out the highs here. This is the first high, and this is the second. So what we basically have in the MACD, instead of a higher high, we have what? Equal highs, which is a double top. Let me zoom the MACD for you to experience, for you to see it properly. Just look at it right here. Just look at the MACD, right? You can see the two tops in questions. We don't have a higher high, rather we have what? Equal highs. But you see, before it, when market was trending well, what did we have? We have a higher high. So whenever you have a higher high, that means market is still trending up. Whenever you have equal highs, what is happening? There is a dearth of volume. We are not getting enough volume to push it up. And then, worse still is when you now have what? A lower high. All right. So these are very important metrics for you to, notice. Okay, so market has moved Down is pulling up. So for those of you that have taken their partials, good for you. It's been a beautiful trade this morning, but we still believe that after a while, gold these days don't want to make it easy. That volume has been pumped in, and in about 8 minutes, this candle is going to end, and we'll possibly have the other candles. So that is it, guys. That is it. So I don't know how many of you took the trade. Yeah, Ugochukwu, good morning. Good morning. Okay. So that is it, guys. Let's see while the trade is going on. I promise, let's see if we can search for this pattern. Let's see if this pattern had occurred sometime earlier. Let's close this. Let's close the MACD for C, and yep. Let's search for that pattern. Now you see the reason why you need to have your simulator, despite having pulled back up. If you are someone that don't understand trading, right? If you're someone that don't understand how trade moves, once it pulls back up, you exit your trade because of fear, out of fear. So you don't want to have that you eventually do what you needed to do, or worse still, your stop loss, which is a managed risk. And then you move on to the next one and you learn from it. So what I'm going to do now is to let's see if we can see such a similar pattern. Yes. I think this in a subtle way can pass for that pattern, especially when you have a range during an uptrend. But let's keep going. Let's keep going. Let's see if we can find one right now. I don't know. Can it be easy? Okay, you can see one here. This one, I like this. You can see the struggle here. Market was trending up beautifully here, right? Check this out, guys. Market was trending up beautifully. But here, after it has corrected, instead of pushing strongly up, it was now ranging, giving us that kind of curvature that I talked about. So this is the thing you see over and over again on the chart once you are committed to bringing your house out, sitting it out, and having the discipline to come out every morning to look at your chart and trade. Mind you, you don't trade with emotions. I need you guys to understand this. You trade with principle, not with emotions, right? Even if you're having a good day, even if you're having a bad day, even if you lost someone, even if your relationship is messed up, even if whatever it is, you should have a neutral perspective to how you trade, and that is a series of logical execution. You definitely have to have that for you to be successful in this business. I used to be, at some point in my life, I used to be someone that was heavily influenced by emotion in trade. And believe you me, whether it's business or relationship back then, any day I had a bad feeling, I'm going to have a losing day. As in, there is no gainsaying that fact. Like, I will always have a losing day if I go to the chart with a stifled, chest. That's when my chest is, trying to explode out of some kind of emotions, or when I'm feeling bad about something, right? It's just not going to be a good day for me that day. So what I learned is to dissociate whatever is happening to me in my life from trading. And that's made a very significant difference, a very huge difference. So I would also want that for you guys. And like I will always say, all you have to do is to ensure, you just have to ensure that you know how much you will lose whenever you take a trade, right? That is a powerful arsenal you need to have. You know how much you will lose whenever you take a trade. That is going to change, it's going to be a game changer for you. Okay, so we made a good profit today. So now I would entertain questions if you have questions on the live stream. When we have good days like this, some days you have to wait 1 hour, 2 hours, 3 hours before you catch a trade, right? Some days it just turns out marvelously, just comes out beautifully, and voila, you capture the trade for the day. All right. So I would want you guys to, if you have any questions whatsoever that you need answered, ask about it on the chat. Now, going forward, let's take a look at what is happening to the United States dollar. Let's check the chart and let's look at the trend, right? Let's see what is really happening. Let's see where the market is going on a macro economic basis. So I'm going to forexfactory.com now, and I'm going to share my screen for you to see Forex Factory. 30 minutes is ending in 1 minute. It's ending in 1 minute. We have about 30 minutes more to stay on the chart. So I am going to share my screen right now to show you what we have on the Forex Factory. So you can open up Forex Factory on your own end. Okay. So this is Forex Factory. Today by 2:30, we're going to have some very huge news today, as you can see, Thursday, right? We're going to have huge news called retail sales, right? Retail sales, unemployment, blah, blah, blah. Now, the question you should ask yourself is, going forward, you should always try to understand this. As a matter of fact, your understanding of the economics behind why the prices move is going to give you confidence, especially when market starts to misbehave. There are certain trades you will take, right? And instead of market moving instantly in your direction, it begins to range. It begins to range some kind of stupid range. The only way you can gain confidence that okay, eventually this should actually go in this direction is if the economics, the news, the fundamentals strongly support the direction of that trade. All right. If it strongly supports the direction of that trade, then you know that okay, this is going to turn out to be beautiful. It's going to turn out to be beautiful. So core retail sales is actually the change in the total value of sales at the retail level, excluding automobiles, right? And as you guys know, whenever it prints green, it's good for the currency. If it prints red, bad for the currency. That's the way we use in analyzing trade. So you can say actual greater than forecast is good for currency. All right. So look at the frequency in which it is being released. Monthly, about 16 days after the month ends. So as you can see, today is January 16th, and that is when this is being released. So it is spot on right here. So you have your unemployment claims as well. What is unemployment claims? You can click this folder. The number of individuals who filed for unemployment insurance for the first time during the past week. And this is released weekly, right? Usually on the first Thursday after the week ends. What is today's date? Thursday. And it is the first Thursday after the week ends, which is the weekend. It's every Thursday, right? So that is it. Look at the historical record here. So what I usually do to analyze some of this is I go to the Forex Factory, check out old dates, see the performances, and go to the charts on TradingView to see how it has performed. Now you see green here and you see red here, right? So what does that tell us? Green good for the currency, red bad for the currency. So meaning that the last record here, what did we notice? We noticed that Um, the unemployment claims filed before this particular day was 225, right? 225. And they say it was revised from 224. But 225 was filed. However, on that particular week, more people filed for unemployment. That is 242,000, which is way beyond 225. And that tells you that this is not healthy for the economy. When a lot of the working bracket, the age bracket that works, are not employed, and they have to file for unemployment insurance, it's taken away from the economy, which is bad. And this is right. So if you check the chart on December 12, 2024, this singular effect should make the gold USD chart to go up. This is December 12th, 2024. So we're going to take a look at it, right? And the time of its release is 2:30. So we're going to look at that now. So remember, if it makes the currency strong, the gold chart will come down. If it makes the currency weak, the gold chart will go up, because you're going to need more dollar to buy gold. So if we go back to December 12, 2024, let's see what happened there. December 12, 2020. Let's see what happened. Let's try to find December 12 here. Okay, so this is January. This is January. Okay, this is December. This is Friday, December 20th. We are looking for December 12th. Monday, this is December 16th. So that should be the previous week. This is December 6th. So it should be somewhere around there. This is 11th. This is 11th. So let's try to find it. This is Tuesday 10th. Thursday 12th. Beautiful. Look at Thursday 12th. All right. Thursday 12th. So what time are we looking at? The time we are looking on Thursday is the 14:30. That is 2:30, which is when the news is always released. So let's go down and check. Oh, massive. Look at this move here. Bad for the currency, and they still pull down. Possibly there are other news associated with it that day. So what we are going to definitely do now is go to Forex Factory and go exactly to the date. So I'm going to click here on date. So I want to go back 1 month behind, December 12th, apply settings, right? So this is it, Thursday, December 12th. I thought as much. So you can see there are lots of, check it out here. You have PPI. So there are lots of what? Conflicting data. So it is it's not a unidirectional news that was published this day. So whenever you have this kind of news where you have positive and negative high impact news published, what takes preference that day is the structure of the chart. The technical structure of the chart is what's going to take effect, and that is what happened this particular day. So December 12th, 2024, we see here December 12th, 2024, and time is what? 2:30 p.m., which is 14:00, 2:30, which is 14:30, which is this particular candle here. All right, let me put a vertical line. So we had news that were published, one that was good for the currency and one that was bad for the currency, right? But if you look before that 14:00, you see that market was already on a downtrend. And how do we know? Market reached a high here Another thing, guys, look at that pattern I showed you, I talked to you guys about. You see this pattern I talked to you, market was trending up here, and look at this kind of curve again, right? A struggle to move up. Whenever you have a struggle to move up like this, market is about to fall. And look at the highest high that was achieved here. All right. And what ensued afterward? Shazam, a downtrend. The high here, the lower high, and then news now added it to push the way down. And if we look just before here, I strongly believe that the MACD should actually give us something here. If you look at your MACD at this time, MACD for C, let's take a look. Just as I had thought, beautiful guys, watch it. Just as I had thought, the MACD also told us market was about to fall here. Look at it. Just look at it here. Are you with me? So watch here. You had the high. You had the high here, which corresponds to this high around here. And this high is already at the tip, or what we call your what? Double. Let's measure it properly, please. Let's measure it properly. Let me use a trend line. We have a high here, and you see this is slightly lower, but I think it can still pass for a double top. But what's important here too is this particular one here. Let me delete this, and let's delete this as well. You have a high here. Oh, sorry. Oh goodness. Oh goodness. Okay. Let's check it out again. Can we see it now? Can we see the chart now? Oh, great. So what I was trying to explain to you guys on this day, market has already shown us its leg that it was about to drop. You can see you have a high here and a higher high here. But correspondingly, if you look at the MACD, you have a high here and a higher low here. So volume was dying while market was trying to track up. And what happened afterwards was boom, market pushed all the way down. You can see it right here. You can see it there. So in a similar fashion, we're experiencing something similar today. All right. So that is how you actually analyze news. We can actually do a lot of things, a lot of analysis based on it as we progress forward. But today, if you have taken your partials and you have left about 20 to 30% running, you can now exit your chart. And yeah, we can argue it's been a beautiful day. So after this struggle, and for those of you that possibly haven't entered the trade yet, all right, if you have not, take a look at the 4-hour time frame here. Just look at the 4-hour here, right? You can see the 4-hour time frame is let's just look at pure price action. You can see that on the 4-hour, you've already had a previous 4-hour and this 4-hour breaking it. Although what is making it struggle now is this base here, but believe you me, I believe that this could likely go all the way down to retrace this shadow, this pulled down shadow right here. All right. But mind you, while this is what I think based on structure, we are not going to act based on it, because I will always tell us we are not what? Predictive traders. We are reactive traders. We trade what we see. We don't trade what we think. For instance, going back to the 30 minutes right now, right? Going back to the 30 minutes right now. If this guy pulls back and closes inside here, listen, look at the series of things we need to know now. If this, as he's pulling up here now, if it closes inside here, then it is actually a fake out, right? If the current candle doesn't pull back down and closes inside this our line, it's a fake out. The next candle that breaks is high, close your eyes and enter a buy. Because whenever we have fake out, time and again has proven to us that it tends to go all the way to take out people's stop loss that believe that it's going to go down. It doesn't start happening today. It's been happening over and over and over again. And statistically, taking such a trade is going to be in our favor. On the other hand, for those of you who haven't entered this sell yet, if this current candle, after doing all this pullback on low here, that is the time for you to enter another sell trade. If it breaks its own low, and your stop loss will now be where? Above the high of the current candle. Because after doing all of this, if you go to the 5 minutes, you see a structure has been printed. A structure has been printed like this on the 5 minutes. If we were to go low, it has no reason coming back down to break that structure again. It should continue down. So that is why if this thing, after pushing this up, comes down to break its own low, you can enter your sell, and believe you me, it's going to pull all the way down because you have a smooth and free traffic over here. It's going to pull all the way down there. And if you look at this structure, remember our goal is 20 to 50 pips a day. And this market has already given us about what? 23, 20. Let's see the full pips it went down to. We have already made about 30 something pips here. Let's call it, this is 36. It has moved, let's say 38 pips, but let's call it 30 pips that you were able to capture, which is not bad for a day trader in a day. All right. So having noticed this, you just have to get stronger and more confidence in your trading. Remember, we now know what to do. One, you wait for this candle to come to break its own low for you to enter another trade if you want. Or secondly, if it closes inside our power of 4 hedge zone, wait for the next candle to break that high. If it breaks it, you are entering a buy, and then put your stop loss below that previous green candle's low. And once you do that, you're going to have a beautiful day. It's already been a beautiful morning today, guys. I'm going to leave you guys at this moment. And if you have any questions or anything that you would like me to address, you can drop it on the chat on the group. All right. Full day ahead, and let's see how this pans out. Thank you and bye-bye.